Here we are. Welcome, everybody. Welcome, welcome. I am Steve Tileman. We are here with Trade the Pool, and we are talking about the psychology of trading. We are going to go over a whole bunch of things that are really important and don't get talked about enough because everybody's focused on lines, everybody's focused on macro, but 80% of trading occurs between your ears, and we're going to talk about that 80% here. So, thanks for joining us. We are going to have a good time here. Appreciate everybody in the chat. Keep the questions coming. We'll have a great Q&A session after. So yeah, thanks for being here. Let's get into it here. All right, all right. So, the psychology of trading. We really want to overcome emotional barriers, and that'll allow us to get consistently profitable. That's what we're here about. Let's get into it here. We're going to be talking about understanding the trading mind, what's actually going on in our head psychologically when we're in good trades, when we're in bad trades, when we're managing trades, all that kind of stuff that really, like I said, it doesn't get talked about much. And I think it's super, super key. So we're going to understand what's going on in our heads. We're going to identify our emotional patterns, the most common ones, and then we'll kind of hone in and see like, you can tell me in the comments which ones of these you really fall for, and we can really talk about it. And I'll talk about the same for my own trading patterns because it's super important to be introspective in your trading and just in life in general. But it really translates tangibly to profit increase, so it's super key. We're going to be talking about some practical strategies for the regulation of those emotions because everybody's human, everybody gets emotions. Trading is stressful. It's all about how we manage it, right? So we're going to talk about that. We're going to be talking about building the psychological edge as a whole, not just mitigating our downsides, but actually building a strong psychological foundation to trade off of. And yeah, we're going to wrap it all up. We're going to have some good Q&As. Whatever you guys want to talk about, we can get into that. So let's cook here. Hard truth about trading. It's not easy. It's not an easy job you guys chose, and I respect you all for doing it. But you gotta be you got to have reasonable expectations both with yourself and with the market, and that'll allow you to really push your edge and become one of the 10% that actually profitably trades profitably consistently. 90% of traders lose money, and everybody wants to say that's because, well, you can't go against the big banks and their algorithms and all that, yada yada. I don't buy it. I think 90% of people aren't willing to be introspective and self-critique their own issues, their own shortcomings, and actually put the work and time in that it requires to be a good trader. I firmly believe anybody can do this if you really dedicate yourself to it. I don't think I've met a single person who I would say like they just can't do this unless you have like a serious maybe problem with addiction or something like gambling, like sure there are outliers, but in general, this is very attainable. This is very achievable. It's just really about learning yourself and being able to overcome your own internal hurdles. So I know this is about trading, but really this is almost like a self-help talk because realistically becoming a better trader will make you a better person. If you're able to control and regulate your emotions, you'll have a sense of stoicism to you. You'll be able to rise to challenges, whether they're in the market or not, And so this is a really worthwhile use of both yours and my time. I got a lot out of putting this together, and I'm excited to talk about this because it's a lot less tangible than a lot of the other trading stuff we talk about, but way more important, I think, to be completely honest. So technical analysis is not the problem. If you're not a profitable trader, it's not because you're not drawing your lines well enough. That might be a component. I'm a big TA guy. But at the end of the day, I really do believe that for 4 out of 5 people, the make or break aspect is how you manage yourself, how you handle yourself during a trade. It's not just handling a position and managing that. It's managing your own emotions through each trade. So yeah, it is really hard. Absolutely can. So the missing piece here is this discipline. And, it seems so hard when we don't have it. But the more you practice it, it's just like working out a muscle, right? You get better and more composed when you meet adversities in the market or life, and you'll notice over the course of weeks and months that you'll be able to handle the losses better, cut them quicker, and you'll be able to really focus on the winning trades and actually keep your mental capital where it's best used. So everybody talks about actual capital, managing your bankroll, which is very important. We've talked about position sizing a lot on here, but I think it's way more important to manage your emotional capital because we only can make a certain amount of decisions every day. And I don't care who you are, your decisions will get worse the more you have to make in a short period of time without a a period of rest. So when we're able to focus our emotional capital where it best serves us, we're able to keep the most important decisions in that window of when we're making our best decisions. So that's the idea here. And just like I said before, your mind is your biggest competitor. Like, this is not you trading against market makers or whoever, whatever platform. This is really about you trading against yourself, because that's what it comes down to. And so nobody says it better than Warren Buffett, the GOAT. The stock market is a device for transferring money from the impatient to the patient. If you have dedication and you have a plan and you're willing to wait for the thing to play out, you will be a good trader. It really comes down to all of these kind of things coalescing into a healthy mindset for trading. So we're going to hopefully talk more about that and get you up to speed if there are areas that you might be lacking in this. So I want to talk a little bit about my personal journey and how I got here, just because I mean, hey, that's the only lens I can view things from. But I think it'll give a good perspective on this. So I don't know about you, but when I was starting, it really felt like one step forward, two steps back. I would make a good trade, I would make a correct read, and then I would feel elated. I'd feel euphoric, and I was not able to carry that over from trade to trade. It seems like if I had a good trade, the next trade would be bad because I was riding too high on the horse, and I was too confident and maybe too greedy, And then when I started to lose, it was so easy to snowball because I was like, oh my God, how did I ever make a winning trade? What am I doing? I don't know what I'm doing. And you'll notice both sides of these, I was so wrapped up in my own emotions and in my own head that it was detrimental to my actual trading plan. So I'm not saying be a robot. That's impossible. But, we can work on not giving energy to emotions that don't serve us. So we're going to talk more about those specific emotions going forward. But for right now, just where I was at, 5 years ago when I was first starting to take this seriously, it really felt like a Sisyphusian uphill battle, right? Like I just couldn't make progress because I was winning, but the losses were bigger because I wasn't cutting them fast enough, and the losses would come in clumps and streaks because I wasn't able to manage the emotions that caused me to take a bad trade in the first place. So I would have the sunk cost fallacy. I would think that I have to stick with it because I've already held through this pain. I would have the all of these different fallacies where I was not recognizing the simple fact that my capital was not working in its best place for me. It could be better served in other positions or just sitting in cash waiting for a great position or a great setup to appear. So I think all of these kind of factors coalesced into me not trading my plan. I would have plans. I just would, I would move the goalposts when I was in a trade based on my emotional status. So it's very easy to happen. And, if this is you're not alone. This is normal human psychology. And what we're doing is we are aiming to transcend some aspects of normal psychology and, honestly just grow as people. So, it's all well and good to make more money, but this ethos will help you also just become a more well-rounded and I would say successful, happier person. At least that's been my experience. So I think that there's no better use of your emotional capital and mental capital and all of that to work on this stuff. So for me, the breakthrough moment was that it's not just a theory, because we hear about psychology and we think about, stuffy textbooks and Freud and, Lacan and whoever else. And it's not, it feels very abstract. But when you're trading, you think that you're kind of immune from that in a way, because you're like, well, no, I'm going off the numbers and I have a plan and I'm an analytical trader, this is my quant type meme. Right. So, it's really tough to recognize these very normal, very human emotional trends that we go through when you're in them. Right. So just kind of, putting it on your radar is a really big first step to kind of, actually making the change. So I realized that, okay, this isn't just a theory. This is something that if I put into practice, I get tangible results. And as I started to do that, it was really like, it was like working out. I was like, oh man, I could not lift this weight before. Now I can. What's the difference? Well, I kept practicing at it, right? I kept stopping out when I knew it was time to stop out. When you get a visceral, emotional, like a physical feeling where you're like, oh, this is not going the way I thought, that's a big sign. So being able to kind of close the window between getting that feeling and actually executing the close of the trade is huge. And that's the kind of muscle growth where that window gets smaller and smaller. And you'll see really, really good professional traders. They'll say the trade isn't working, I'm out. It'll just be like that. It's like, I thought it was going to do this. It's not doing this. I'm out, you know? And that the parameters are different for everybody. You give it more room if you're a swing trader or an investor. But at the end of the day, your thesis. And if it's not going as planned, you got to cut the bag. Got to cut the bag, especially in this market where, a lot of things are very overvalued. And if the market, like momentum or hype around a certain sector or name changes, you can see 80% drawdowns. If you are not willing to sell at minus 10%, what makes you think you'll be able to sell when you're down 20% or 30% or 50%? So it's a very slippery slope. And I know that's a logical fallacy or whatever, but there's some real truth to it. The worse things get, if you're not willing to rip the Band-Aid, it'll be exponentially harder the worse the cut gets. So we are here to take paper cuts, right? We are going to be wrong. We're traders, we're speculators. We are on some level gamblers, so we got to learn how to be wrong in the right ways. You'll hear me say that a lot if you hang out around here. It's okay to be wrong. It's not okay to stay wrong. You got to be wrong in the right ways. So you got to learn how to detach emotionally. Like I'm talking about, good traders, they say it's not working, I'm out. And, it's not like they're not feeling pain. It still sucks. I'm not saying I'm like a professional or anything, but, it still sucks. When I was a full-time trader and that was like literally my only source of income, it was hard to it's really hard to go to work and come back and maybe not make any money or maybe lose money, So that kind of stress, you really do have to keep it in check, because this is not, I'll give myself a little pat on the back. This is not something that everybody is comfortable doing, and it really is, it takes a certain kind of person to succeed at this. So if that's you, kudos. And we're going to work on how to hone that. Sorry, I had to let my cat in there. So we got this iceberg. Technical analysis up top, trading psychology is the majority. Like I said, 80% of trades, the real meat and potatoes takes place between your ears. It's all about how you actually approach it and how you manage yourself during it. So if I do my job, what you'll learn today is how to identify your own emotional triggers, how to understand the neuroscience behind trading mistakes. We're going to talk about practical techniques that'll help you regulate your emotions. And then we're going to build a psychological edge for the markets. So first off, let's understand the mind, right? This is psychology 101. You don't need to go to college after this. So we have your brain versus the market, right? It's really what it comes down to. The market is like the collective psychology of the cohort of traders in any given stock or market, And what we see on the chart is literally just a charted out version of their psychology, of their emotions, right? If it's just keeps drilling, I mean, people are pretty bearish. It's doom and gloom, right? If people are they just buy, and it's going to the moon, that's euphoria represented in a quantifiable chart. So what I want to talk about is how our bodies kind of respond to things. So you get the fight, flight, or freeze responses, just like you would if you were a prehistoric caveman and a saber-toothed tiger was chasing you. Like, it's not that different. That still is the framework we operate on. So we got to be really mindful of when we get these fight or flight or freeze responses. And I'll tell you right now, the freeze is what really kills traders, because there's so few things in life where if you just say, I'm scared, I'm going to just not do anything for a week. There's very few things in life where that could very possibly be the worst decision, right? With trading, doing nothing can be a terrible decision sometimes. I'm sure you guys have been there. With saber-toothed bears chasing you. That's what it feels like. That's what it feels like when you're short a small cap and you got Bill Huang and the Tiger Cubs just jamming the buy button and you're getting squeezed to all hell. It really feels like someone's coming to get you. And I mean, something is coming to get you, right? So that's where if you freeze with the saber-tooth, you're screwed. If you freeze while you're getting squeezed, you're going to get cooked. So we got to really be quick to recognize these things. And it's important to remember that we evolved for survival, not for trading. So like I said, we got to where we were. We are the success of generations on generations on generations, like hundreds, if not thousands of generations of people who were scared enough to not get bit, right? So we got to recognize that inside we have to overcome this natural tendency to be risk averse, right? And we'll talk about that more when we're talking about holding losers compared to holding winners, and where that risk aversion comes in and how it can really bite us. But I just want you guys to keep in mind that, like, this is not a you thing. This is a human thing, right? The reason why we're like this is because we were so successful getting to this point evolutionarily. So, yeah, I think that's very important to note. And why logical analysis fails under pressure is because we are simply not thinking straight. Remember, I said, like, the emotional capital, the mental capital, the more decisions we have to make, the more prone to errors our decision process will be. So if you are really stressing and watching every minute candle and you're just white knuckling a trade, all of those things, all of those decisions that are like micro decisions, you might not even realize you're making them. Like, oh, should I hold? Oh, is this the end? Oh, is this where I take profit? Oh, I should have took profit there. All of these things whittle away at your reserve of mental capital, right? And so when that gets too low, your logical analysis will just suffer. And it's not because you're bad, it's because you're human, right? So there are ways around this, and we'll talk about them. What you feel when you're in a bad trade. All right, options traders, I know you feel this. Throw a 1 in the chat if you feel this. How many times has your account opened up at market, at the bell, you had some swing trade, and your stomach just drops? You're like, no, what? I'm down 80% on this contract. What happened? Am I a clown? What did I do? Do I cut it? Do I sell it here? Do I wait for it to come back? Why did I buy so many? All this stuff, right? I know some of you have been there. I sure have. So that is the amygdala hijack. That's your lizard brain going, we need to protect you. Something's terribly wrong. You have messed up, right? So yeah, all the time. One. Absolutely. I figured it would be like that. I'm not putting you on blast. This is so human. This is very natural. It's the worst feeling. It's the guh meme. It's the guy who put his life savings on Apple puts and it ripped up 8%. And you see him at open just just dying on the inside. We all have that inner gut inside us that we need to kind of tame. There's 2 traders inside of you, and one of them is that guy. So we can't feed that guy, right? We got to feed the Chad stoic trader who's in winners, holds winners. He expects his trades to win. If it doesn't work out, he cuts it. And you know why? Because it doesn't matter. He wins. He's a winner. The next trade will probably be a winner. If not, he cuts that too until he starts winning, right? So that's the mindset we're trying to cultivate here, right? So this chart here is showing adrenaline, this big wave, versus cortisol. So adrenaline will come in big spikes. You'll open at market and everything will be blood and you'll be terrified. And then you'll start to stabilize and recover. Your adrenaline will go down, but then the next sell comes, right? And your adrenaline spikes again. Over the process of this wave, this sine wave, your cortisol steadily rises. So remember, these are like the decisions you have to make. Oh, do I sell? Do I hold? Do I sell? Do I hold? Do I sell? And the whole time, your reservoir here is getting drained by this rising cortisol, this rising stress. So it's super important to remember these. They're not super advanced concepts, but they're really, really key in understanding why we make the decisions that we do. So there are 4 big emotional killers. And I know these feelings very well. I'm sure most traders do. We have fear, which shows itself in missing opportunities. You got the FOMO. You got to get in now, even though it's up 8%, because it's got to be up 20% tomorrow. It's just got to be, right? Because otherwise I would be trading emotionally, and that couldn't be the case, right? Of course not. I mean, look at me. So you get the FOMO, and you also get those early exits, and that's almost more detrimental because you can have a winner. You can do all the right things. You can correctly analyze the market sentiment and the fundamentals and the technicals, and they can all come together for this beautiful trade. And then you sell for 3% and it goes 100%. And those are the ones that really kill your mental. Let me tell you, those ones hurt so much more to me than than even big losses, And I think that's another kind of psychological component. Like, I don't know if any of you play video games, especially competitive video games, but something I've noticed is the wins never stick in your mind as much as the losses, So overall, you look back and you're like, man, why do I do this? Why do I play Dota? Why do I play Counter-Strike or whatever? Where I remember getting just 360 no scoped from across the map so much more than I remember my baller plays, right? So I think that it's really important to remember that this is a psychological thing, and we just need to kind of push back and not feed that inherent kind of urge for us to trend negative. And remember, this is just because We focus on the negative because focusing on the negative kept us alive when things were trying to kill us, right? So now it's more about the market. So we gotta readjust, right? We're evolving in real time. So the next one is greed. I know you know this feeling. I sure do. The over trading, the saying, oh, I can catch every high and every low, and I'm gonna carve the heck out of this chart, and I'm just gonna kill it, right? And then you get caught flat-footed once, and then you're like, oh no, and then you start stumbling, and then it just snowballs. And a big way that greed manifests itself is in excessive risk. And very often, when traders are oversized, even traders who understand their risk bias, they don't think they're oversized because for them, they have mentally weighed that factor with the factor of, well, yeah, sure, if it goes wrong, it would be bad, but it won't, because X, Y, and Z. I'm so confident about this, right? And so it's like, being a trader is so weird because you have to have an ego. You have to have an ego and say, I think I have an edge over the whole market. I think I see something smarter or more accurately than the rest of the market does. But at the same time, you have to be humble and willing to eat that ego and say, I thought I was wrong. And so threading that needle is really hard, and it's really easy to put on excessive risk because in the moment you're so sure. No trader takes a trade they think will go red. I'm sorry, if you do, you're a psycho. That's just not how we operate, right? We try to play winners. And so unless you're like specifically acknowledging like I'm taking a starter and I expect it to go down, but then again, why not just wait for it to go down, right? So I think that excessive risk is very, very insidious because people don't realize they're putting on excessive risk until it goes against them. So we got fear, we got greed. We also have hope. And hope mostly manifests in holding those losers and saying, no, AMC's coming back. It's going back to 50, baby. You just total, trust the plan. Whenever an institution or an organization or a subreddit is telling you to trust the plan, that's a red flag. I trust my plan, not the plan, So I think it's really important to be able to identify that inside of yourself when you do have that hope. Because I got the hope. I got the hope about a few of my bags right now. But the thing is that they're not excessive risks. And for me, if I'm holding a bag, it's because I trust the name, the thesis behind the company, and I could expect massive volatility, but in 5 years, I think that I'm in a good position. So there's some hope that isn't bad, right? Like that's not crazy, damaging to my P&L, for example, but I could probably work on that, right? And I think it's a lot more prevalent or front and center for a lot of traders in that you look at their ports and they have a lot of bags, right? So that's kind of a systemic thing where it's like, oh, I'm prone to holding this thing because I see an inherent value that the market doesn't, right? And so it's one thing to have a thesis and to stick with your thesis. It's a very different thing to just hope and pray that the market completely changes its outlook on a stock. So hope can be okay, usually pretty bad. And revenge, this one will kill you too, right? So it's so easy. Maybe you had FOMO. Maybe you were over trading. Maybe you took a big stop out. Maybe you held a loser. There are a lot of reasons to feel revenge, right? You feel like the market took your money and it owes you one, And that's a super, super, super toxic mentality to be in for trading. The market doesn't owe you jack. Let me just say that straight up. This is to most degrees, it's a zero-sum game. If you are making money, somebody is losing money. You are not entitled to anything. And when we start feeling that entitlement, I really recommend to just walk away from the screen. Go do something else that you like, right? Go pet a puppy. I don't know. Go smell some flowers, touch some grass, do something to reset. Because if you feel entitled to money from the market's going to take your money, right? Because it's about transferring the wealth from the patient to the impatient. And if you're sitting here going, I was wrong 3 times today, so that means I get owed one, I get a freebie here, the market's going to say, oh, this guy's on tilt. And, I bet I can fade his 4th trade too. And he'll be wrong a 4th time. And just in general, whenever we're trading impulsively, we're more at risk of sizing up. We're more at risk of chasing losers. We're more at risk of doing all these things that if we ran this statistically and did this 100 times or 1,000 times or 10,000 times, it would be negative alpha, right? It would be a bad thing to do. It would be losing you money over the course of time. And maybe it works when you do it once or twice and you think you're a god and you're like, I'm justified in this. And that's why one of the things I like to say is that the worst thing that can happen to a new trader is they start winning right off the bat, because it gives you this false sense of security and confidence. And when things start going against you, you don't recognize that that's just variance. That's just the numbers. That's just how it works statistically, how the cookie crumbles. So I think it's really important to keep these in mind. And just remember, fear. There was some study, I forget who did it right now. I was looking at it when I grabbed this quote, but fear causes like 73% of premature profit taking, according to one study at least. So it's a very substantial factor here, and why I think fear is probably the most important of these. But let's hone in a little more. So let's talk about some cognitive biases that really cost us money. We have confirmation bias, right? Where we only see the things that support our thesis, right? So there might be three indicators that are saying, kind of red flag here, but you're like, oh yeah, but we're holding the 276 banana and moving average, and my 30-second Heikin-Ashi chart is telling me that we're bound for reversal. Or there's so many ways to fool yourself into thinking that the ones that don't agree with you don't matter, and only the things that you see aligning matter. And again, not because you're a bad trader, it's because we're human, and humans do this. We search for patterns, we search for common ground, we search for things that support our worldviews. So it's not a you thing, it's a market, or it's a mind thing. And you also have recency bias, right? So recency bias is overweighing of recent events. So you're more prone to say that your last, well, what's a good example? Just in general, if something happens recently, you're more likely to think that it'll happen again next. Even if the numbers say, well, what happened recently was just a 30% chance, and 70% of the time it'll happen like this, your mind wants to go, yeah, but that 30% just happened, and that feels more real. So really important to kind of keep in mind that this is another cognitive bias, and it's just a thing that our minds do for X, Y, and Z reasons. I'm not a psychologist. I don't really get why, other than a fundamental, rudimentary level, but it's a very real thing. So really important to keep these two in mind. We also have anchoring, which is kind of fixating on irrelevant factors or prices, right? So we'll anchor our whole thesis on something that really isn't the crux of our idea, right? And we can kind of fool ourselves into that because maybe it's like a certain moving average or level that you're like, well, this is the thing I care about, right? And maybe that's not the most relevant thing. Maybe it's just, I don't know. I'm trying to come up with an example in my head. In general, just it's you got to be holistic about this stuff, right? And not focus on one thing and give it too much weight. And the last one I want to mention is just loss aversion, which is the fear of losses exceed the joy of gains. Like I was talking about in Counter-Strike or Dota, you remember those losses, those ones sting. You'll think about those as you're falling asleep a lot more than the wins, right? And so this chart, the gist of this chart is that you are psychologically more likely to hold a loser than you are to hold a winner. You're more likely to be afraid of the potential reversal. And how you should be looking at it is you should be afraid of the actual loss, not the FOMO of you selling the bottom and then it reverses on you. So just risk management is really important, and always looking for positive risk reward trades, right? So you're looking for at the very least 2-to-1, or let's see, at the very least 1-to-1 risk reward, because then if you miss half or if you win half your trades, at least you're break even. But ideally you want those 2-to-1 or 3-to-1 risk rewards, because then if you win half of your trades, you're actually making consistent money. So you don't need to be right more often than you're wrong if you're only trading situations that give you beneficial risk rewards, situations there. So I look at all of my trades in terms of risk versus reward, no matter what it is, and then I'll size based on that, but I think it's super important to start with that as your baseline. So yeah, in the chat, which of these biases affects you the most? Are you one that falls for the confirmation bias? Does the recency bias get you? Where are you guys at? Well, I get some water here. Oh, good to see the regulars in the chat. Good to see you, DJ 2 a.m. Steph, good to see you from the stream. Always enjoy trading with you. Welcome, Christopher. Good to see you back. Welcome, David. Thanks for coming, guys. Let's see. Steve, with so much volume coming from high algo trading and high frequency trading, is the retail trader and trading psychology becoming less relevant? Great question. I don't think so. I think that there's always going to be some new thing that everybody's going to say is going to completely change the market dynamics. But at the end of the day, the same strategies that worked on charts over 100 years ago, they still work today. And I think that there's something very fundamental about our psychology that I don't think that we are going to be mass overcoming anytime soon. And because of that, I think that um, I don't see it. I don't see trading psychology ever actually becoming significantly less relevant. I think that even if we advance to a place where we're not actively trading and we're just monitoring and managing multiple algorithms and quantitative systems, it still takes a cohesive, balanced, emotionally regulated mind to do that. So however much we leverage the new technologies, we're still the ones who are going to be pushing the buttons to some degree or another, right? So and more on a more structural level, that's the case for all these big market movers too, and because you can say like, well, they're more sophisticated or whatever, but they're beholden to their investors, right? And their investors sure aren't. What they have to show their investors, hey, I'm in the things that are going up, and that means to some degree chasing the things that are going up, right? So that kind of stuff, I don't think is ever going to fall out of style. It's interesting though, and maybe we can revisit that in 10, 20 years and see if I'm wrong. But yeah, good question. All right, David, confirmation gets you. Okay, I feel that. Bill says fear of missing out. Chris says all of them. Okay, that's me. That's me. Yeah, let's see. Sometimes I'm more comfortable in a losing trade than I am in a winning trade. For some reason, I get nervous when I'm in a winning trade and I have to go outside and get a little bit of air. I feel you, brother. I feel you. This is something, but it's great. You recognize that. And it seems like you've thought about this because you can like verbalize it pretty, very coherently. So, I mean, that's great that you're able to, I mean, you're biting my style here. I have a whole slide on this, but absolutely going outside, resetting. It's such a big thing because you start getting, I call them speed wobbles, right? Like life's going so good, you're moving so fast, the trade's going so good, you're going so fast on a hill that you start to get the speed wobbles on a skateboard, right? And you want to jump off, you want to bail because it's scary, but almost always that's a lot worse than just riding it out, right? And waiting for the things to stabilize. So I think that it's great that you're taking initiative and you're saying, okay, I don't feel good, I need to go change that. Like that's more than 95% of traders, I'd say. So that's awesome. And yeah, I feel you. We're going to talk about that, but psychologically, just know you're not alone. We got. Sorry, one sec. I'm about halfway through, I think. I don't know if the stream can hear your question. We got a voice question on Discord. So if you don't mind, I'm happy to. Tim can answer that in the text, and then I'm happy to answer all questions that I don't cover before at the end too. But I just want to kind of keep a flow here. Um, All right, guys. So let's see. John McClane with the loss aversion. Absolutely. Confirmation bias from DJ 2 a.m. So, yeah, it's all these things, right? They all get us, and we each have our own kind of personal profile, personal psychological profile about which of them really cut deep. So, it's really good. That's why I asked. I want you guys to kind of start thinking about this already. So, as we finish this up and as you go on about your weekend and into your next trading week, you can start trying to notice when these things come up in your trading or just in life, and you can start to kind of mitigate them with what we'll talk about in the next couple sections here. So let's identify the emotional patterns. That's what I was starting to do there, and I think that there are a few things that we can do that'll really help. So I know this is not a sexy answer, this is boring, but journaling really really helps in a lot of ways. It's not just the P&L tracking, which is amazingly useful as is, to have like a hard baseline of your trading, so you can say like, oh, I'm having an off month. Maybe my psychology needs some tweaking because I'm underperforming my historical averages, right? But it's so much more important, I think, to document your emotional states during these periods of upswings or downswings, and so that you can kind of have a holistic pattern identification system where you can say, okay, how am I feeling when I'm trading my best? How am I feeling when I'm trading my worst? What are these warning signs that I can look out for on both ends of the spectrum to keep me aligned with my goals of consistent profitability? So this if you do this, it'll be really useful. It'll be boring, but it'll start to be a comfort thing where you enjoy doing it, and it'll become your own personal psychological roadmap. So it's really useful. I mean, I like Jungian psychology and stuff, and so I've done a lot of they call it like shadow work, or like kind of like just self critique and writing that down and seeing how that progresses over time. And I think that it's the same idea in trading, where you get so many benefits about actually getting these things out of your mind and onto paper, and your brain just works in a different way where you can connect these patterns in a lot different ways. Different synapses will connect and start firing, and it'll really help you get, like I keep saying, a holistic picture of where you're at. So keep this in mind. I'm not saying you have to do it, but I'm saying if you do it, you will benefit. So another thing is we can have like an emotional triggers checklist. So we can have different, we can kind of start compiling things that really grind our gears, our pet peeves in the market, market conditions that trigger us, right? Maybe we hate gap ups because we're like, oh, we missed the trade. Now I got to chase, and half the time it fades. Maybe we hate, like I hate gap ups and gap downs for that reason. It feels like it throws off my trading plan, and I have to kind of completely reevaluate in the morning there. And it's just a whole thing, right? That's just a me thing, but I've recognized that. And so I either don't trade, or I'll just scalp, or, I'll do things to mitigate my exposure in market conditions that I underperform in. So, another thing is just like personal life stuff. I mean, we're all people. We all got our own stuff going on. And I don't care how much of a god tier robot stoic trader you are, like it trickles in, right? There's no way to kind of completely separate your work and your personal life. So obviously address anything in your personal life you can if it's impacting your trading. If it's something out of your control or something that'll take a long time to fix, just keep that in mind. Maybe paper trade, maybe trade with smaller size. Don't put all your eggs in one basket if your basket is having a hard time, right? And this also gets into more technical factors like time of day emotional patterns, right? Like you can get really granular and say, I'll tell you how it usually is. Usually people trade a lot better in the morning because the liquidity in the market allows for more directional trading. The ideas tend to stick more. The levels tend to work better. And most importantly, we're fresh. We haven't been burnt out, getting chopped up all lunch session, right? I know we've been there. Don't lie to me, guys. I know you've been there. I know you kept trading after a good morning and lost a good chunk of that just on weak afternoon price action, right? So if we're tracking this, it's a lot harder to take those afternoon BS chop sessions and trade those when you have a book that says, hey, I trade 40% better in the morning. I could trade in the morning and go do something fun with my day or productive or whatever, right? Something that isn't giving back that money, right? And also you'll get a feel for your win and your loss streaks and the psychological impacts of those, how they might snowball, how you might get euphoric on the upside. Because as who was that? Was that I think it was Christopher was saying. Yeah, Christopher was saying that he gets nervous in a winning trade. And so, there are psychological impacts to winning too, and they're not always good. So just all this stuff kind of comes together to help give you a much more full, fleshed out picture of who you are as a trader and as a person. To be honest, you gain a lot from this stuff. So we have some warning signs. Like I said, you open your account, you open your Robinhood in the morning, your your SPY 1 DTEs are down 80%, and it feels bad. You feel it in your stomach, you feel it in your guts. You might start sweating. It's a physical reaction, and you realize that because all of a sudden the weight of your bad decisions are starting to become real, right? So it's not always this pronounced, but I use this as an example because it's very cut and dry, right? But how about when you're in a trade and you expect it to do one thing and it's just not quite acting right? It's giving you little warning signs, and your stomach starts to tell you this something ain't right. Something's a little fishy here, a little sussy, And I think that is really key to be able to recognize early like that. Maybe it hasn't like reached your stop or something, but I've saved so much money stopping out of positions when I get this feeling. I'm not saying like trade off of your emotions purely, but I'm just saying like if things aren't working and your body is telling you something, you got to listen to your body. It doesn't mean you always have to do exactly what your body's telling you to do, but it's important to be cognizant of these physical sensations because they often precede bad decisions. They often precede saying, oh, I know I shouldn't hold, but I'm going to. And that's why my stomach hurts because I know I'm going to do this and it's dumb, that kind of stuff. And that's why that's what we want to really cut out as much as possible. So these thought patterns, they can be different for everybody. For me, how it often looks is the goalpost moving, right? Where I go, well, I think it should do this. And if it loses this level, then something's wrong. And then it loses that level. And I'm like, well, yeah, but maybe I'm wrong. And maybe it's like, see how I'm moving the goalposts, and I'm saying, well, maybe I'm wrong. But what I'm really saying is like, no, I'm right overall though. And this is a good trade to be in, even if I was wrong on the details. And so that's the kind of really insidious goalpost moving that can really, really cost you. So yeah, your gut. Absolutely, John. We have, I think like 3 times as much serotonin production in our stomach than our brain. That's truly our second mind. And I don't know if any of you, I hope not, but if any of you have been in like life or death situations, like you get the feeling. And once you've been in one of those, you listen to your gut after that, because it's picking up on a lot of subconscious things and signals from our environment that our conscious mind isn't as prone to picking up because it's so preoccupied with staring at lines and reading the Bloomberg feed and the Discord memes or whatever else, right? But your body keeps the score. Your body really is a lot more in tune with the environment than we give it credit for. So it's super important to listen to that. And by doing this, like I said, I will stop out of trade, or I will exit trades before I actually stop out. And I will evaluate my trading plan and, to just address the issue before it becomes a bigger issue. Real quick, I'm going to check over in Discord for some questions here. All right, I wish I could put these on screen. Taquito's making some good points. He says, I think the focus on psychology and psychology first makes modern traders incredibly worse than the traders in the past. It used to be strategy first, and then you find an actual thing that works, and then you solve the 90% of any psychological issues. That's fair. So let me read the rest of this before I make a comment on it. I'd say most people hardly put in proper work to find something that actually works and then blame psychology. Even with the best psychology, you'll still lose. Okay, this is totally fair. So what I would say is, obviously you can't just beat the market with a good attitude, right? It's definitely more than that. You got to have your system. Where the psychology comes in is, like he's saying, it's about ironing out the problems about why your system isn't working. If you're trading a system that works for other people and it's not working for you, that's where psychology can give you a drastic advantage. But great point. That's totally worth mentioning, Taquito. Thanks for bringing that up. But that's why we're not just talking about psychology, right? This is just one of many webinars in the past and to come. And most of them will be focused on the more tangible nuts and bolts of trading. But the thing is that when I talk about certain systems or certain indicators, it feels relatively focused, right? Like it's great there and you can integrate it into a bigger system. But this is something that's so widely applicable that I don't care what you're trading. If you could be trading literally anything, and psychology is going to be a major factor. So yeah, definitely good points there. All right. So we talked about identifying your emotional patterns and also the warning signs. So let's talk about some practical strategies and how we can regulate those emotions. So I think that a pre-trade mental preparation is super key. Just be going into a trade ready to go and not jumping in because you woke up and you pulled open your charts and, oh, this looks like a buy, I got to get in. This is more like, all right, I woke up, I checked the market, I did my psychological routine. I personally meditate a few minutes in the morning. That helps me a lot to clear my head, but maybe maybe coffee is your meditation, or petting your cat, or just getting ready in the morning, whatever it is, you do something to get your head straight, right? Because I don't know about you guys, but I just wake up out of bed like, oh, what's going on? So I need a few minutes to kind of collect myself. So getting your head straight, and then assessing both the market and your mindset on the market. Did overnight price action do what you thought it would? Does that change your plan? Do you feel a little tilted because you read it wrong? Where are you at, right? Gauge yourself in conjunction with the market. And then I think it's really important to set intentions. What are your goals for the day? Is it Friday? Do you just want to want to lock in your gains for the week and just take trades if they're really really appealing, and not take lower probability trades? Do you are you on a prop trading account and you need to make that money by X day? Hopefully not. Hopefully we're not rushing our process to meet certain goals that won't serve our profitability overall. But in general, aligning your intention with your trades for the day, right? So if you set your intentions, and this is, again, most of the stuff is applicable to life as a whole. Setting intentions early on in the day is so great, just for being able to have a day that you feel good about when you go to bed at night, and look back and say, hey, I had this goal and I hit this goal, or I had this intention and maybe I didn't succeed completely, but I worked towards it and I'm building something, right? And this is what I'm talking about training a muscle, right? This is all about how we can set ourselves up tomorrow to be in a little bit of a better position than we were today. So this is, like I said, it's not sexy, but it is what it takes to be a profitable trader. So, and then the last thing here is just energy and focus evaluation. Some days I wake up and I'm just not feeling it. I don't have energy. I don't have focus is the big thing for me. I've got some health stuff, and sometimes I get brain fog. And if I have bad brain fog, I'll say in my Discord, hey guys, I'm probably not going to trade today. If there's great opportunities, I hope you all catch them. I hope you make $1 million. But for me, I'm not feeling it. I don't feel like I'm putting my best work out, and I don't want to potentially put myself in harm's way because I have a bad read or because I'm not clear-headed. So everybody's different. Some people are machines. They just don't really feel much difference day to day. And good on you. Keep trading, keep making money. But for most people, I think that we do have this significant variance in recognizing when it's a bad day or when it's a good day, when you feel really dialed in and just in flow state. Maybe take a few more trades, maybe size up a little bit. I'm not saying go crazy, but just play. It's like just like in the market, right? If the market environment is working and all the trades are working for the most part, you size up. If the market stops working as well and trades are, breakout trades are starting to fail, for example, then you take much smaller position sizes until things start aligning, right? So I think these are all important to kind of look at before you go into a trading day. And once we have this framework, we can talk about the trading plan as a psychological anchor, and how to essentially frame things in a way that is most beneficial for when things don't go your way as well. So basically having a flow chart here. So you want to, before you get into a trade, you want to have a predefined entry and exit, and you want to know the position sizing. And because you're doing this before you enter the trade, it is not draining your emotional capital and your mental capital as you enter a trade, which is when you should be sharpest, right? You should be really focused on it starting to work as you anticipate and tracking its progress. So if you do this before, you are much less prone to moving those goalposts like I talked about. And I think that's really key. So you also have if then scenario planning. Like I'm saying, okay, I expected to do this, but what if it doesn't? What am I going to do if it doesn't? You don't have to get too in depth, but you should know what you're going to do if it goes down X amount, and not to your stop yet. You should always have the stop, but you should also have a plan like, okay, what if it comes down, holds above my stop, and then starts to consolidate and looks like it wants to push up again? Is my plan to buy more? Is my plan to de-risk? Is it going against me? What is your system telling you? What is your plan, right? Because we got to know what we're doing before we do it. Otherwise, we're prone to making flippant decisions based on emotion, and that is what'll kill traders. I've seen so many traders have a plan not go their way, and then they just stop planning and they just start wheeling and dealing, just gunslinging through the day. And at the end of the day, they're hurting pretty bad because they gave into their emotions. They succumbed to that, and it directly affected their profitability. And a lot of times, what it'll look like is you'll give back a week or 2 weeks or hell, a month of progress in a day or two, because when it rains, it pours, right? When you're out of the zone, it's so hard to catch yourself and stop the slide, right? So I think it's really important to kind of have this stuff in I like to think of my brain like a computer. Like you have your read-only memory. What's it called? Your RAM, basically like preloaded stuff in there that you can quickly reference, right? So if I preload a plan in there, I don't have to go and, calculate my position sizing or whatever. I know that already. I know, and I'm good to go. I don't have to go look at where should my stop be, because I already know where it's going to be, because I wouldn't be in a trade if I didn't know where my stop was. So that kind of stuff will really help you. Some in the moment techniques though that you can do to help bolster this preparation that we're talking about they're pretty simple, but I think that they're super understated. And I think it's really worth your time, even if it sounds woo and oh, I'm going to do breathing, I'm going to do meditating. Yeah, I mean, it works. It works. So if you're really stressing, you gotta do the woosah. You gotta big breath in, oxygenate your blood, get your blood really pumping. Get yourself out of that disassociative headspace where your eyes start to glaze over and you're curling in on yourself, going like, "Oh God, how is this happening? Why is this happening to me? What did I do, Lord?" It's about kind of resetting and reintegrating with the moment. And yeah, big breath in, that'll really help. Slow breath out, that'll really help. You'll regulate your body and your emotions, and you'll be able to get it under control much faster. Also, I think the 10-second rule before major decisions is good. 10 seconds is not going to kill you. You can wait 10 seconds and make sure you're not acting impulsively. Make sure it feels good. Make sure you're not just chasing something or FOMOing something. You want to be confident in your decisions. So, you don't always have to take 10 seconds, but if you're stressing, don't rush to a decision. How many times, guys, one's in the chat here, one's in the chat, if you have said, "Oh God, this trade isn't working, I got to sell it." And then within a minute or two, it had reversed on you, right? Or even a few seconds sometimes. And if you just let it breathe and say, "Okay, if it stops me out, it stops me out." But, I think it's pretty common that things will reverse right when we kind of succumb to our emotions. And again, it's not a coincidence. It's because the way that markets work they operate often on crescendos of volume. So you'll get seller exhaustion or buyer exhaustion, where you think the squeeze is just starting, you're holding short and you're getting kind of cooked a little bit, and then you get this big old candle on high volume, and you get out, you're like, "Oh my God, it's going to double. I got to cut my losses." And you end up selling the very top as it puts in a big top wick because you got scared by the big surge, right? And it's totally normal. It makes sense. But, just giving it a few seconds to breathe, you can often say like, "Okay, you have a little bit of a better picture, I'd say, on things, and you're not beholden to a 1 minute candle, which may be an aberration." All right, John McLean, we got a good question here. What are 2 or 3 resources that you recommend for trading psychology? So my number one resource is Trading in the Zone by Mark Douglas. I think it is hands down the best trading book I've ever read. For me personally, at least, it's made the most tangible difference. So that's the strong one. Trading in the Zone, Michael Douglas. There's a free ebook on YouTube. Put that on while you're, mowing the lawn or, doing errands. Listen to the whole thing. Think about it, sleep on it, put it on again. Listen to this thing 3 times. I swear you will get more and more out of it each time. It's very easy to understand. It makes a lot of intuitive sense, but there's depth to it. And it's, incredibly important in framing things the way I'm talking about. I mean, honestly, this whole presentation is kind of a condensed version of trading in the zone, because I think it's so key, and I've learned so much about it for myself personally. So that's my number one. If I have to give 2 more, that's tough. There's so many good ones. I would say there are some channels on YouTube. Randy Howe, I believe his name is very, very good. Tim, I know, is familiar with him. He introduced me to his work. He's amazing. And there's one more I'm blanking on. Hopefully I remember it by the end of this, and I'll get back to you on that. But the headline here is Trading in the Zone by Michael Douglas. You'll love that. So pop that off. There we go. Got some more recommendations here. I'm not familiar with this one, but I'll check it out. The Mental Game of Trading by Jared Tender. Thanks for the rec, Jose. Yeah, Mark Douglas is an amazing teacher. Absolutely. I've learned more from him than most people, for sure. Steph is saying Tom Hugard. Hope I'm pronouncing that right. Hugard is good. I'll check him out as well. Thank you. Cool. Awesome. I love these. I love getting the community together, and I learned so much from you guys too. So this is just, it's good stuff. Love what Trade the Pool's doing with these. Okay. Let's talk about the power of automation. I know I mentioned this before, but preset stop losses and targets are a godsend for the emotional trader and just for all traders, because sometimes you got to let the trade cook. Sometimes you got to let it cook and just let it do its thing. And if you freeze frame it on any 1 minute candle, you might get a false representation of the overall trajectory of the trade. And having your preset stop losses and targets really helps, because as long as you kind of know what you're doing with setting those levels, you're gonna have a better win rate to let the trade play out instead of try to kind of smart guy it and you know just psych yourself out of what you kind of expect is going to happen, because the market's going to do what it's going to do. There's going to be no straight lines. Maybe it'll come right up to your level and dump a bit first to get more liquidity before it pushes up through your level. There's so many different things that could happen, which would make you feel a little bit worried in the moment, but overall it's just part of the natural progression of the market and the trade. So I think that having these preloaded and good to go, it will really help you, because then if you're really stressing, if you get that pit in your stomach and you just don't feel like you're going to make a good decision, you can just walk away. I know I said it's really dangerous as a trader to get the freeze response and do nothing, but preset stops and targets, they allow you to do that, because sometimes we do freeze and sometimes we need to reset. We need to go outside and get some fresh air and do the woosah. So I think that it's really helpful. And in the same grain, position sizing calculators, super helpful for being able to know the sizing before you get into it. So then you're not oversizing, then you're not undersizing. You're getting the amount and the exposure that you're looking for from the start, and it's just not even a factor for you anymore. You don't have to worry about it. You don't have to burn that mental capital. Easy. So instead of constantly monitoring a billion different stocks, let them come to you. Do your charting in the evenings when you're nice and relaxed. Sitting in front of the fire, put some jazz on, have some tea or a nice bourbon or something. Who knows? But just when you're feeling good, when you're feeling in the zone, do your research. Then put all your alerts on, and throughout the trading day, as the alerts hit, you say, "Hey, oh, my trade came to my level. Now I can take it. I don't need to watch this chart every day." And I think that's a huge value that most people don't capitalize on, because they want to watch it happen. They want to see, they want to have their focus list and cycle through every single one. And that's well and good, but it can get really overwhelming, right? So just having these alerts set at really key levels is so awesome. And if you're on TradingView, it's awesome because you can set alerts for indicators too. So I can set it for when it comes to my weekly trigger, or when it comes down to a 200-day moving average, or when it sweeps a 52-week low and recover, stuff like that. So that allows you to really frame trades and really just keep your mental capital focused on the best trades, right? Because if you're looking at it, it's because the setup materialized already. So good stuff there. And by doing all this, it removes discretionary decision points. Like, it allows you to kind of not get caught up in the weeds and not get caught moving goalposts, and just stick to the actual bones of your thesis, essentially. So we talked about what we should be doing in an ideal situation and how to kind of prepare for the worst. But what if the worst happens? Let's talk about how to recover. So, I mean, I've said this before, I'll say it again: never trust a trader who's never blown up an account. Controversial, hot take. I'll stand by it. If you've never experienced a big loss, you haven't learned a key component of trading. I truly believe that. How you deal with the loss will speak magnitudes in your progression as a trader from that point. How you recover from these big losses, how you hold yourself, how you hold your psychology, and how you hopefully don't let it get to you, and how you can recover will really dictate whether or not you can, go on to succeed. There's a famous story about a floor trader who got caught on a surprise rate cut. He got caught short a big lot of full-size NQ contracts as the surprise rate cut hit. And he lost, I believe, 2 million in an hour, right? And this was like back in the 90s or whatever, so even more money. You know what he did? The next day, he reloaded his account. He was back on the floor, and he's now made like, I don't know, probably 100 million or some crazy multiple of that loss since then. But, he still talks about it as a really pivotal point for him, where it was super important for him and how he put him, how he held himself to make sure that he didn't let it define him. He didn't let it get to him. He didn't let himself think of himself as a losing trader. Everybody takes bad trades every time. Everybody has these tail risks of something really bad happening. What he learned is that he was way oversized and he was way too confident, but he was confident in his skills. So, you can be confident in your skill set, and that doesn't mean you have to oversize and go crazy. So he went back to the floor and he didn't overtrade. He didn't oversize. He wasn't trying to make it back. He was just trying to go to work and do his job in the way that he knew he could do. Right. So I believe that as a group here, we're good traders. I've seen a lot of not so good traders, but I think people in here are pretty driven and pretty disciplined, and I think that'll only improve. So, give yourself some credit, and when you take a loss, say, hey, it happens to the best of us. I will not let this define me. I will not let this affect my trades going forward. And sure, obviously it's easier said than done. There's going to be a learning curve, and everybody will falter and give in to that in some aspect and have a past trade affect a future trade. But we want those to be exceptions to the rule. And the rule is that we can be successful and consistently profitable, and the losses are not what define us. The wins and how we handle both the losses and the wins are how we define us. So I know he said this guy jumped back in. That's what he felt he needed to do. For some of you, maybe you need to take a cool off period. If you're feeling too emotional and you don't feel like you can get back in the market without the previous loss affecting you, take some time off. I've had to take 2.5 months off of trading before when I had a pretty bad streak here. This is maybe 3 years back, and I came back strong and had my best trading year since. So it's really important to be able to say, hey, I'm not feeling it. I'm feeling very unconfident. I got to go rework some stuff, rework my system, rework my mental space, whatever it may be. But it's important to be realistic with yourself, And if that means taking a cool off period, take it. There's no shame in that at all. So this will help you rebuild confidence systematically, right? So you take a big loss, well, start booking those base hits, right? Start getting those scalps in. Start taking small positions, taking small wins, and let that start to compound. And it'll really help bolster your confidence and help you say like, hey, no, I can do this. I can do this. I made a mistake, or the market went against me. It could be not even a big mistake on your part, but I mean, if it's a big loss, probably there was risk management issues. Probably there was some psychological thing going on where you weren't willing to take the loss and you let it get bigger. But if you can identify that, you don't have to keep doing it. You can rebuild with a series of trades that stick to the rules, and that should show you that, oh, if I do this the right way, I will make money. And doing this will really help you get over these big losses. And like I said, just learning from mistakes without the self-punishment. That's a really hard part for traders. We like beating ourselves up, I found. We're very critical, and we are just very harsh with ourselves. And I think that it's not conducive to learning. I think that there's one thing to recognize a mistake, and there's another to harp on it and to beat the dead horse and to, like I said, allow it become a part of your trader identity. You can't be the guy who's like, I'm the worst trader ever, inverse me, I have a friend who has that as his Discord handle, and I always want to yell at him and say, no, you are a good trader. You made a bad trade. And, there's a big difference. So, how we view ourselves and think about ourselves really does affect what our output, very, very true, I think. So yeah, don't beat yourself up. I mean, you already lost the damn money. You feel the pain. You did something wrong. You're trying to identify. That's all you can ask for from somebody. If somebody makes a mistake and they make an honest attempt to better themselves and to right their wrongs, you wouldn't yell at somebody who did that, right? Don't yell at yourself either. It's we get punished enough by the market as it is. We don't need to make it worse. So we talked about what to do when things go really bad. But we should talk about just reframing your relationship with losses as a whole. Like I said, the losses are tuition. They're not failure. They're part of the process of becoming successfully profitable. They are inevitable. And like I said, it's okay to be wrong, and it's inevitable to be wrong, but it's important to be wrong in the right ways. So it's really important to think about things from a probability outcome, right? We are essentially playing a numbers game. Who cares what happens this time? What if we run it back 100 times? That's a statistic I care about. I don't care about if I'm right or wrong on a coin flip. I mean, play some poker. The amount of times you lose hands that you have an 80% probability of winning, it'll really highlight how variance works, you know? And it's just, it is what it is, playa. You know, you win some, you lose some. It's the way she goes. So it's really important to not let the losses define you, and it's really important to let your system define you. Well, not even define you, but you know what I'm saying. You know what I'm saying. So the mathematics of trading success, it really comes down to set your risk reward to beneficial profiles. If you're only taking 2-to-1 trades, you can be wrong more than 50% of the time and still make money. You know, these are kind of ways you can frame things for your own success, and you just rely on the statistics and doing it day in, day out. Eventually it'll work out. You know, you can grind to compound your income. And I think it's also really important to celebrate the good stuff, you know, and it's not just about the money you make. It's important to be happy because you did the right things in the trade. And really, like it's like a kid, you know, it's like potty training a kid, to be honest, you know, like when you take profit at your target, you know, it's kind of like saying good job pooping, you know, like you did a good job, you're working towards something, you're training yourself towards something. And so you want to encourage that behavior, just like you would encourage it in a dog or a kid. You got to encourage it in yourself. Yeah, learn what you did wrong on the trades. Absolutely. Sounds like a blackjack card counter. Maybe in another life. I'm not smart enough for that. I do love playing cards though. Um, so yeah, celebrate the good processes. It's about the process. I know it's cheesy, but it's about the journey, not the destination, right? You know, although the destination will be pretty nice when we're all retired on our Lambo yachts, but we'll get there. You know, there's no rush. There's no rush. There's plenty of trades to take. So on top of that, just building mental resilience is so key. And again, this is about the market, but it's not really about the market. You know, I mean, it's so pervasive. And again, I don't want to blame people. I mean, life grinds you down, especially modern life. You know, but it's so important to become unbreakable. You know, I think it's super important to say like, hey, I know that things can get bad, but I know even at the worst, I have confidence in me and my abilities, and I'm going to be able to overcome adversity. And you can do this in a lot of ways. So you can do stress inoculation techniques, which I think that would be like how I think of that is like it's like exposure therapy to stress, right? You can put yourself in stressful situations, and I'm not saying take giant trades to see how it feels when they go against you, but maybe in a paper account, or maybe just, you know, in general, doing things that make you uncomfortable, but in a constructive, safe environment where you can start to see how they make you feel and start to kind of learn how to mitigate that. Because it's one thing to read about it, but it's another thing to feel it, you know? And just confidence building exercises are great. You know, that can be very different for different people, but you know what makes you feel confident, you know, and just doing these kind of systematic smaller trades where you can really see the systems working, they really help build confidence. So highly recommended there. Also, this is cheesy, but hey, you know what? I think there's a lot to like affirmations or saying things out loud, you know. And I know it's silly, but you know, it does work, you know. It helps you internalize this stuff. Just like when you're writing in a journal, it gives you a different kind of outlook on the stuff you're writing than if it's just in your head. Saying it out loud in a mirror, I know you'll roll your eyes at yourself, but I dare you to not feel better after a week of doing that. So and also just building a support system, you know, whether it's the traders in here, or just, you know, in you know, whether it's my Discord or the Trade the Pool Discord, or whether it's a Twitter, you know, kind of thing, or Reddit. You got to find your people. You got to find who you can lean on, because we're all humans. We are pack animals, and everybody wants to be the Sigma grind set, you know, guy who just goes out and doesn't need anybody. But we all do better with people. So find your people. Find people that make you feel good. Find people who are good traders too. So that's why you're lucky in here. Everybody's nice and a good trader. But you know, you are the combination of your 5 closest friends in a lot of ways, right? So in the same way, your trading will be a reflection of the people who trade around you. So surround yourself with winners and with positive people. I think that's a really big thing. And like always, just continue the learning mindset. Always be hungry to learn. I don't got to tell you guys this. You are spending your Friday afternoon watching some nerd talk about trading psychology. You are in the right place. You have the learning mindset. You're going to go far. Keep learning, keep expanding, you know? Um, and let's just talk about the compound effect, because small improvements matter so much. I feel like I'm repeating myself a lot, but again, when I'm repeating myself a lot, it's because it's worth repeating. The compounding effect is not just a capital, a rule of mathematics. It just psychologically so big, right? Just making tomorrow 1% better than the day before. You do that for a couple weeks, your life is completely different. So I don't care if you're trying to dig yourself out of a trading hole, or if life knocked you down and you need to kind of bounce back from some extenuating circumstances. Just baby steps, baby steps, baby, just one thing at a time, little tangible things that you can push the needle, just run the football, get those 3-yard plays, because they add up and they'll make you feel so much better when you look back at the end of a month or a year and say, wow, I actually did make a lot of progress, and I did it the right way, right? I didn't make these risky plays, these giant stretches, these leaps. It's fundamentals, baby. It's just, you build from there, and it really is just a very healthy way to go about trading in life, I'd say. So yeah, psychological habits versus the one-time fixes, right? So you're trying to build these psychological habits like I'm talking about, as opposed to just making these big gambits or Hail Marys. The Kaizen principle. I think I've heard of that. I'll have to look into it more in depth. But yeah, I'm going to say yes. The Kaizen principle. Um, Systems thinking is the basis of sustainable change, right? If you're not doing things based on a system, you're just kind of swinging and floundering, right? And we don't want that. We want sustainable change, and that comes from habits and healthy habits and building off of those. And this is all conducive to a long-term growth mindset, right? Because we're all I don't know, maybe you're old, I don't know, most of us are pretty young, and if you're not, then you have enough life experience to know that this stuff is true, and you don't need some young guy to tell you, right? We're here for the long run. We're trying to build something, or we're trying to build some empires here, right? So one step at a time, we'll get there. So that's about all I have to say. I'll just give you some key takeaways, and then you can start dropping some questions here, and I'm more than happy to answer. But what I want to leave you with is that trading psychology is a very learnable skill. This is a muscle you can train. You can do this a little bit every day, and at the end of a month or a year or whatever your time period, you will notice the difference. It's very learnable. Anybody can do it. Especially the people who say, "Oh, I'm just too emotional. I can't do like that. I gotta trade like I'm a cowboy. I'm a gunslinger. It's just what I do." It's like, you have a weakness and you don't want to address it. That's a problem. So if you address your weaknesses, you will grow as a person and a trader. And awareness precedes control. Can't fix a problem if you don't know there's a problem, right? So you got to recognize it. You got to do that self-reflection, that self-critique, and then you got to figure out a plan from there. But the first key part is you got to recognize that there's a problem, So small change creates big results. Just the effect of compounding. I won't harp on it. We already talked a lot about it. It grows. 1% a day is huge, whether that's financially or just in any aspect of life. And the last thing here is process focus. It eliminates the emotional volatility, right? Focusing on the process, it allows you to take those stop outs with grace, right? You're not like pinning too much weight on any one trade. It's part of a whole thing. It's a numbers game, and you're doing the right thing. So even if it doesn't work, you did the right thing, and that makes you feel good. So yeah, that's the webinar on trading psychology here. It's nothing too groundbreaking, but I think it's so important. So I don't know about you. I might rewatch this every couple months just to keep myself framed correctly, because I'll have my weeks where I'm bad too, and it's just like meditating. It's not about being perfectly zen the whole time. It's about catching yourself drifting off and returning to your breath, right? It's about catching yourself maybe giving into some bad habits and then returning to the good stuff. So that's what I will leave you with there, and then we can start talking some questions here. It looks like I got some starred ones. I'll start pulling those up, and I'm just gonna refill my water real quick first, give you some time to get some new ones in too. All right, guys. Oh, you like my pajama pants? Casual Friday, baby. All right. Hell yeah, Andy. Nerds rock. Nerds rule. All right. Let's get to some questions here. Long story short, be chill like Steve. Oh, you guys don't see me when I'm off camera. Everybody's like, you're so stoic. You're so positive. And I'm over here like freaking out half the time. But I'm aware of it and I'm working on change. So there you go. All right. Let's get into some of these starred questions here. Ken, I cut all trade, whether it is winning or losing. So it sounds like you are a little bit risk averse on both sides of it. Great on the losing side, but try to remember, right? We are trying to cultivate a positive mindset where essentially we expect to win because our system is good and our mindset is good. And maybe it doesn't happen this trade, but over the course of our trading careers, it will compound. So if a trade is working how we should, and we're taking, positive yielding risk reward trades, then we want to let those cook. And a quote that really stuck with me is never cut the flowers to water the weeds. How many people do you know take profit on a winning trade because they want to average down on a loser? I've been there too. And, sometimes it works, but more often than not, you want to keep your capital in the trades that are working and let those cook and cut the ones that aren't. And if the ones that are winning start working, well, then you cut those too. Then you have more capital. So I totally feel you, but it's you have to have a system. And speaking of that, God Emperor says, I wait patiently to double down in all caps. So if your strategy is take a starter and size in, that's valid. Know your system, take your system. I won't tell you not to. I will tell you, be careful. Is NVIDIA mooning next week? Anybody? We have earnings next week. So is it next week? I think it's next week. I saw significant bearish flow on SMH, which could very well be a hedge. The chart to me looks constructive still, but I think that most things need a little pullback, and we could see that pullback be catalyzed by NVIDIA earnings. Personally, not touching them. If I did, I might take a gamble on some SMH puts, but maybe we go down on Monday, and then those puts from this week get monetized, and they use that to buy some NVIDIA call autos. I don't know. Let's see what the market gives us. I really like to watch price action into earnings to try to gauge reactions, because NVIDIA in particular really loves to pull back for a few days into earnings if it wants to be bullish, if the market is anticipating bullish results and wants to reward the anticipated earnings report. So if that's the case, they'll often kind of hollow out the range and pull it back and give themselves a nice entry, usually into a key support, which looks scary because you're going into earnings and the candle will close at the low of the day or something. But it's important to take a bigger picture look and keep an eye on those higher term levels and see if it's trading into support, and then it might be worth taking a stab. So that's what I'll say there. Alrighty. We got Ken again saying, last week I feel like trading is gambling and you lose control of yourself. It happens, man, but you're recognizing that. So maybe take a step back, whether it's just, doing something that refreshes you this weekend or reevaluating some of your old trades. Do whatever you feel you need to do to get your head straight on for next week. And if your head's not straight on for next week, that's okay too. Take the time you need. Don't rush it. Maybe paper trade it. Maybe use your trade the pool prop account to minimize your risk. And, you'll get there. I believe in you. But you're recognizing it, which is a huge first step. My boy V-Sync saying, for me, it's almost always that the risk the other way, making myself trade when I shouldn't. Interesting. I know that I see that in you, and I know that there are a lot of traders like that. I think a lot of people put a lot of pressure on themselves to do this consistently and profitably, right? And that sometimes manifests in saying, like, I maybe shouldn't trade, but I feel a need to, right? And, again, I won't say it's right or wrong, but just it's something good to know about yourself, right? So Ken's saying he can hold a loser, but I can't hold the price when the price went up and went back down. I feel you. That's tough because it's an emotional roller coaster, right? It's that volatility whipsaw. So that's really tough. And often it'll go up and come back and it'll just catch, it'll back test support, but it's hard to identify that when all you're seeing is I was up this much and now I'm only up this much, right? So I'm with you. I'm with you. Mabu, I manage risk well. However, I need to hold winners longer. You and me both, brother. You and me both. I've gotten a lot better about cutting my losers, but it's still hard to hold those winners. And it's hard even to take profits. To be honest, like in QBTS for me, it's been a huge winner for me, but I only have a quarter of my position to my target, which was, just under $20. And I was in at like 11 or whatever. But I took some at 13.50 because I wasn't sure it was going to break out. And then I took more at 15 because big round number, and hey, that was a 40% gain already on the shares. So I wanted to make sure that it wouldn't go catastrophically like so many of these small cap trades do. So, or have a potential to do. So I only have 25% of my position for the 100% gain or 80% gain, whatever. But hey, you know what? That's good enough for me. But I still wish I'd managed it a bit more diligently, and that I could maybe have half on still, or maybe just it's easy to say in hindsight when a stock goes up 80%, I wish I held more, right? But I overall think that it's important to stick to the plan, and I did stick to the plan. So I hear you. Holding winners is tough. I open new trades and pay extra spread, jump the spread. Yeah, no, that's one of the aspects of FOMO that I think is insidious. Just jumping the spread, right? And saying I can't wait for my limit order to fill. I need to kind of get in at ask. There's an old market maker saying, if you've bought at ask, I don't care what the trade does. I've already won. I've made my money on the spread difference. I've hedged myself X, Y, and Z. I'm good. Are you good? That kind of thing. So, I'm sorry. There's a second part. And then miss the move and lose. Yeah. No, I've been there plenty of times, man. Absolutely. Absolutely. DJ 2 a.m. I've experienced all of those except for greed. Still haven't rode a trade to a real good winner yet. Hey, you'll get there, man. You're new, and it's hard not to book a small win when you're new, especially when you've been booking losses too. I'm not saying you, but in general, So yeah, take your time and just remember, if you have a good thesis and it's starting to work, let it prove you wrong, right? Let the trade prove you wrong, or prove you right, hopefully. All right. Christopher says, Neil spoke of a strategy that works perfectly for how I like to trade. Essentially, waiting for a double bottom or a bottom to V play has changed my trading tremendously last year and was my first positive. Oh, that's awesome. That's great. I do something similar. So often I want to take a trade and I'm saying, I don't, like early in the morning, and I go, I don't think that this is quite ready yet. Waiting for that bottom to show itself, especially a double bottom, is so good. So either you can wait for a price to come down, come up a little, come down and make a higher low. That's a sign of strength. Or you can wait for it to make a lower low, but then sweep back up and reclaim that first low. And those are some of my favorite setups to take. I call them failed breakdowns, and they're incredibly high reliability, and they're very easy to manage the risk on because they've already popped the bottom out and swept stops, and then they've reclaimed that level where they got people out at. So if it goes under there again, first off, it's not going to be a big loss, because you're just buying on the reclaim of the level. But more importantly, it's a very clear sign like, oh, they ran stops and came back up, but now it's going lower again. So that's probably the sign of a continuation move. Whereas, ideally they run the stops and then it's, looking for an upside target, which is the move that we are hopefully, going to catch. So that's one of the very biggest foundations of my trading system. Most of my trades look like that. So absolutely, I think Neil's dead on the money there. Let's see. Because of that strategy this year, I'm on track to have my second positive year after 3 straight years of 3 straight losses. Congratulations, man. That's huge. And I think that you're reaching that pivotal point where the accumulation of your knowledge that you've gained through the tuition you paid in the first 3 years is starting to pay dividends, right? And so I was very similar. I was red my first 4 years, actually, 3.5-ish, and then started making that back up pretty fast because some things started clicking, right? So it sounds like some things are starting to click for you, and that's awesome. I'm really glad to hear. David saying greed is what gets him. 100% same day options trade. Imagine if you use 25x size. Imagine if you use 25x size and then news came out and they were down 50% instantly. That's the other side, right? So I hear you. I hear you. Lot sizing is very tough, especially with options, to kind of catch that. But the nice thing about options is you don't have to have a lot to make a really significant amount of money, right? I love trading just a couple contracts and then just, taking one off at 100% and then just kicking my feet back and hoping for the gravy train, right? Because, I've already defined my risk at I can't lose if I sell one at 100%. So, but that's tough when you have one contract and you sell because you're at or a little over 100%, and then it ends up being one of those 5 baggers, 10 baggers. Those are definitely tough. Don't get me wrong. Steph saying, hello all, this is a good one. If not the most important aspect of becoming a profitable trader. So true. I experience these emotions all the time after years of trading, and still hard at the time. Yeah, absolutely, man. I'm not saying like I am the Zen Grandmaster Buddha. I am not saying like I don't fall for these things too. Every single day I fall for one of them probably. But the thing is, I catch myself quick and I usually don't act on them, right? So I'll get the FOMO, but I'll say, oh, I'm feeling the FOMO. I'm going to wait for this to settle. And then usually I get a better entry, right? So DJ 2 AM, very, very nice. I'll have to look more into the double bottom. Maybe Steve at the end could say or explain that. Oh yeah, I think I did that. Yeah, absolutely. Yeah. Okay. You're responding to Christopher. Perfect. Yeah. Nice. So confirmation bias and loss aversion for DJ 2 AM. That's what gets him. Still being new, you doubt what you're seeing, and you're worried about losing, sorry, I butchered that. Still being new, you doubt what you're seeing, and you're worried about losing because maybe you lost a previous confirmation that we thought we saw. Absolutely. So these kind of mental games you play with yourself, they're tough, and everybody succumbs to those. But that's why it really helps to have your trade plan ahead of time, how you frame it. So then, hey, if you're wrong, you're wrong. And you can stop out, and then if you become right again, you can get back in. There's no shame in that. It's all about flexibility. So what I learned the hard way, and still is much better, is to exit and follow the plan and get back in on the signal. There you go. Exactly what I was saying. Totally. The Piper, it's intuition. It's designed to keep you alive. Dead on, dead on. So like, you don't beat yourself up because, you got scared and stop out. You say, hey, I was trying to keep me safe. That spooked me. And you know what? Like, we got here because of our preservation mechanisms. So you got to work with them. It's kind of like a Buddhism thing where, there's some types of Buddhism like Zen where it's about killing the ego. And I think it's more like figuring out how to dance with the ego, how to work with the ego, right? Because like I said, as traders, you kind of have to have an ego, right? If you just kill that, you're just going to say, well, I don't know what'll happen. How could I know what happened? I know nothing. You make no trades. So I'm totally with you there. So can you name an example of integrating a psychology plan into a trading plan? Yeah. So for example, trading plan would be, it's kind of vague. I feel like we talked about this. In general, just integrating aspects of psychology, like saying, hey, I know I'm prone to this issue, so I'm going to not trade the morning session. My trading plan is, since I have FOMO often and I want to chase moves right at the gate, and I know that those moves often revert, I'm going to wait for maybe half an hour in, and then I'm going to wait for a certain technical confirmation, whether it's a break of the pre-market highs, or I do that a lot, or a sweep of the cash session lows and a reclaim of that, something like that. But just kind of knowing your own psychology and using that to color when and how you take trades, I would say. Could I explain looking for a double bottom and why that's bad? I think I did. If I didn't cover that enough, just let me know and I can get back into that. The Piper says, I'd feel less scared if I had more of a plan or method or edge. I know a lot about moving averages, flags, levels, breakouts, and VWAP. Do you know a book with a system to apply things in a rigorous way? Yeah, I do. What I would recommend, what first jumps to mind is Mark Minervini's books. Trade Like a Stock Market Wizard, I think, is one of them. Market Wizards is another one. These guys trade the CanSlim system, which is essentially a combination of fundamental analysis and technical analysis. So it gives you a nice framework, a nice balanced framework. And then his system is very focused on certain setups that he looks for, in particular volatility contraction patterns. So charts getting tighter and buying as volume dries up, and essentially catching that big volatile move. So I would say that that's probably what I would first recommend. There are a lot though. So there's a lot of different systems because it's really tough. I hear you because it's one thing to understand how these concepts work in a vacuum. You know how a flag will work, how moving averages work, how levels work in general. But it's another thing to actually trade them actionably. So I would recommend Mark Minervini's work. I would recommend the the style of you could call it smart money concepts or ICT's trading style. I'm not going to say go listen to him. He's kind of a little bit wackadoo, but his system is very effective and it's very regimented, which might be something that you're really looking for there. So it helps. For example, you're talking about flags. Well, he has a lot of work on how to identify whether a flag is a false flag, so to speak. You know, a internal liquidity grab. So, for example, you have a high, comes down, you have a low, it comes up, and then it starts to flag. If the big liquidity draw is still lower than the current range, this is a false flag that's just sweeping into this previous range to get internal liquidity before moving lower, if that makes sense. So, yeah, just kind of stuff like this, higher time frame framing of things will really help you kind of hone in on when the concepts like trading a flag break or trading a moving average recovery or whatever else, whether they align with the higher time frame movement of the market and kind of keep things aligned in that way. All right. Ken says the market responds to earnings reports in often unpredictable ways. Absolutely. And so because of that, I don't trade earnings. Very often I don't trade earnings. What I love to do is wait for the post earnings setup. So a day or two to a week after earnings, you'll see the chart tighten up. And if it's a bullish response and it gaps up, often you'll get better entries than just buying the straight gap up. Plus, you won't have to wait for it to kind of accumulate more and push higher. Plus, you won't potentially get trapped if it's a fake breakout, you know. So by allowing the chart to kind of stabilize after earnings, I am doing a couple things, right? If I'm trading options, I'm saving a lot of money on premium because I'm not buying the gamma spike. I am increasing my likelihood of profitability because if it breaks down, I won't be a part of it. And if it keeps going, well, I've barely missed any of the move. You know, I got in where I should have, right? You know, with institutional investors. Do I think CoreWeave is getting overextended? Good question. I don't know. I can pull up the chart. Let's take a look. All right, CoreWeave. So that's a chart. I was going to buy at 40 and I forgot. Whoopsies. Okay. Do I think it's getting tired? This is tough. So let's look at a few things here. So first off, we have the initial range, this low to this high. I'll draw it down there. So in terms of expansion, we have hit over the 2. What we can look for next is the 2.6. And we did hit that as well, and we showed some sellers. So what I would watch is this 96-ish level. Holy heck, we are over $100. That's wild. Okay, I haven't looked at this in like a week. It's a squeeze. It's a parabolic move. Tough to short. This is a pretty high volume. It didn't break higher in volume, so I'm not 100% sure this is the top, but you could potentially define your risk at the top here and say you're looking for, I don't know, maybe 65 again, this old high. I mean, but this is a crazy move. Heck, I don't know. Let's look at the hourly. I would say it refilled in this big power up gap here, and we're just kind of trading this range until something makes a decision. So inside this range, we're literally pinned at equilibrium. I don't have much of a read on this, you know. Maybe 65 again, this old high. I mean, but this is a crazy move. I would say it refilled in this big power up gap here, and we're just kind of trading this range until something makes a decision. So inside this range, we're literally pinned at equilibrium. I don't have much of a read on this, you know. it could push one more down and then recover, and this could be like a flag that's forming, or this could be the start of a big roll. So we are definitely extended. I'm not going to call a top. I think it's possible the top is in. I think that it's also not something I particularly want to short. I'd rather short something like Palantir, which had its big parabolic move, came back, had another crazy push, and now is starting to look like it's got want to roll. So for me, I'm much more likely to want to short this. But then again, this could be where we're at on CoreWeave, right? It could just need a little more up, or it could be the top, and then it could have a major drawdown. So if you see something, trade it. But personally, I'm not looking to touch it either way right here. Okay, Ken says the market responds to earnings and oh, I read that already. Yeah. VSync mentioning Randy Howell again. Absolutely. Talks about it being hardest for entrepreneurs, executives, self-driven, because they're used to working hard. And if there's a problem, jumping in to get it done. So yeah, absolutely. Randy Howell has a lot of good stuff. I'd highly recommend checking him out. He has good YouTube videos and all of that. He probably has books too, but I'm a millennial. I like the YouTube. Savage Money Trading. Money mindset is key. Don't look at PL at all for at least a week. Interesting. Yeah. So with a little bit of a few caveats, I definitely agree. I think that so many traders cut trades short because they just they're like, I made $100, I made $500, I made $1,000. Trade's done. I made my money. Which, I mean, if that's your target, sure, but I think it's much better to play the charts as opposed to your PL. So don't stop out because you lost a certain amount of money. You should have already known your risk already and been okay with it. Stop out because a key level has been lost, right? That kind of thing. And same on the other side. Don't sell because it's up a certain amount. Sell because it's time to sell, right? That's where my head's at. And all right, Dennis, good to see you, man. You are spot on picking this subject for retail investor. Your quantum names gave a big return. Do you still think there's life in them? Yeah, let's take a look. So y'all heard me talking about QBTS last week. You're welcome. It's up, what is it, 50% more? 45%, hit 50% up. Yeah. So obligatory, victory lap, of course. Do I think they still have room? Yeah, I do. I'm only in a quarter of my position now, but I think they do have room. We hit one of my major targets at the 1.68. I'd still really like to see the 2 hit. That's what I'd really like to see hit. We're just breaking out of big consolidation, big pattern. This should be good for a double of this base, which would be that 21. And then our stretch goal would be 27. One thing to note is that it is a very high beta kind of laggard sector where the market was chasing this is chasing this because it was an area that was underperforming while all the megas, they missed the bounces on those, right? And the market as a whole. So they were looking for areas to catch up because the Wall Street was underinvested on this rally. So I'm a little bit worried seeing such a big candle. I mean, it's great, right? We got the breakout, but I wouldn't be surprised if these names need to cool off, and that would coincide with the market starting to pull back, which personally, I think that we're at a place where it's very decent potential. If anybody is subscribed to my newsletter, you know that we were looking for a red week because we had the 90-day cycle from the all-time highs and the 45-day cycle from the lows, both aligning this week. So there were two kind of pivot points or potential trend change points here, cycle points. And lo and behold, that was the high, and we are pulling back. Not ready to say new lows yet, but hey, this was the thesis, right? So we got our back test of the 200. I told people that I'd be closing some of the little shorts there. I think we go lower, not 100%. If we do go lower, then the names like QBTS could have some of the wind taken out of their sails. Just something to keep in mind. I'm looking at new hot sectors like nuclear is crazy. I think CEG looks absolutely amazing. This tight flag break. It should pretty easily clear all-time highs, I think. Some levels there. Probably 400 even. So yeah, I really like this name. I missed SMR and Oklo. I was not in this trade. I wish I was. So this is major continuation here. I would expect these names to keep going. Big old cup, big handle, like explosive handle too. And now it's wanting to break higher. Oklo, very similar. It's got a lot of room, but it's hard to chase up here. One name, I forget the ticker. Oops, let me pull it up. That I did take a small position in today, and I'll be looking to add is GSRT. They are a DSPAC, which is entering the nuclear space, and their NAV or net, what is it? Net account value, net asset value is, I forget if it's 1040 or 1030, but essentially it won't go below this price, or it really shouldn't. So it's a relatively low risk trade compared to some of these other ones, and I think it's got tons of room above. So yeah, keeping a close eye on this. And also, since we mentioned CoreWeave, I'm also in GLXY, Galaxy Digital. They are a kind of CoreWeave sympathy play, and they didn't have a good day today. That's unfortunate. But I think that it's a new IPO. I think that they do have a lot of potential to move a lot higher. Just something to keep on your radar. We'll be seeing how it bases out here. Right now, we're pinned to this high volume node at 23. But yeah, these are some of the things I'm watching for the next week. Just the little freebies of alpha for you, because I appreciate you guys hanging out and sticking through this whole thing. I know it's a pretty long one. Oh yeah. So I do got to head out here in a second, but I'm going to finish up these questions. So if anybody has any questions before I leave, pop them up now. Day party experience. Any hope left in a firm stock? I got caught holding the bag. Oh no. Let's take a look. Swear I have crayons on everything in the market, it seems. So there's definitely hope here. I mean, this is a pretty standard pattern where we have the cup and handle. It tries to break out. It couldn't get too much momentum because of a lot of macro factors. It came back, undercutted this key level. Now it's pinning at this key level. This is a very, very major level. It's called a stage 1 base. If we can get some traction above this, I would expect continuation up eventually. I'd say probably to 100 before getting some pullback. These kinds of charts take a lot of time to progress because they have so much overhead volume from these wild moves up here when they were wildly overpriced. So when it came back here, anybody in this base became green again, right? And so they got a chance to get out and they all bailed. So now the only people left are the bag holders from this spike up here. So, and in that regard, it just takes a while to digest. I'd say there's definitely still hope. I don't hate the company. I think it's a risky space, but I don't think it's a silly space to be in necessarily. Let's see. You say you are holding the bag at 56. I think you'll get a chance to de-risk pretty quickly here. Yeah, I wouldn't be too worried unless we start losing like. I mean, you can watch this 50 EMA or 50 moving average because that's catching really nicely. So if we close a candle below this, probably goes for the gap fill down at 45, maybe lower to 42. Otherwise, I would say that basically we're basing at this high volume node, and I would expect a push at least to the top of the shelf here. But I think more likely up to this high volume node, which is 55, and you get out just about break even. So keep an eye there. You could also play for a push higher. We could also entertain the possibility of an inverted head and shoulders playing out here. So that's something to consider too. I would say if it loses this level, it's kind of rough, 45-ish. But otherwise, it looks fine. Might take a while to play out though. Bill R says, do you have a book recommendation for strategy for day traders? Mark Minervini is swing focused. Absolutely, he is. Do I have a book recommendation for day traders? I cannot think of one off of the top of my head, to be completely honest. Most of the books I read focus on swing trading. That is the style of trading I do the most. That's a good question, though. Bill, tune in next week, and I will have an answer for you because I want to do some research on that myself. But I don't have anything off the top of my head for you. Who was that with the method you quoted? ICT, yes, ICT, Inner Circle Trader. You can also look up Smart Money Concepts. A lot of people use this style. It's basically a more defined version of a lot of other kind of common sense or long established trading strategies, and he packages it into a whole system. It is free. You go check him out. He's kind of a dogmatic weirdo though. But I trade off his system a lot of the time. So, a grain of salt with everything. There is a lot of good information in there. Absolutely massive trove of free information on his YouTube page, but you just got to deal with his personality. So that's on you whether whether you're willing to. There's plenty of other people who can give you the same information. Me being one of them. I did a ICT Basics webinar a couple weeks back. You're more than welcome to check that out. And if people responded well to that, so I think I'll probably do a follow up on some more advanced concepts too. Okay. Looks like I got through my starred question. I'm going to go through the others here. Dave's and PJ's too. Hell yeah, brother. All right. What else we got? And thank you. Yeah, Tim is putting up our thing here. Join us after stream in chat in the Discord, the Trade the Pool Discord. I will be there. Can't be there too long. I got to go run out for dinner, but I will be there for at least 15 minutes to come hang out and talk, chat, all that good stuff. Oh, look at that. We got a nice graphic there. Love it. Production value, baby. All right. What else we got? How do you get over fear of being in a winning trade? Fear of success? You believe in yourself, brother. It takes time. It just takes time. Keep doing the right things, and you'll start building that. It's just a muscle, and you just got to grow it. Definitely normal to feel scared in a winter, especially if you're still pretty new and probably booked some losses. Just keep with it, and remember why you got into a trade. Keep looking back on your thesis and saying, no, everything's going according to plan. And yeah, absolutely. I think that's the basics there. All right. Yeah, ICT, Inner Circle Trader. I am still live, only for a minute though here. Always have trouble trusting prop firms. You guys actually pay out. I don't blame the sentiment. There's been a lot of sketchy ones. I'm just a random guy on the internet and I work for them. So, say what you will, but I've seen lots of payouts. I've never seen anybody get rejected for a not very valid reason. In fact, I've had trades reversed on my account, which other firms would not have entertained, but they were very reasonable. And, if there's a legitimate reason, they will do right by you. I've not heard anybody have trouble getting payouts personally. Grain of salt. I'm here primarily to teach. That's what they pay me for. So I'm not here so much to sell the product, but I do use the product and I like the product. So I will recommend it on those grounds. Let's see. God Emperor mentioning Palantir makes a profit. CoreWeave doesn't. You're right. I like Palantir as a company. I just think that they need to pull back. I don't know how to feel about CoreWeave, to be completely honest. Ask me again in 2 years. Alrighty. I think that will do it. I'm running late here, so I will hop over to the Discord and we can come hang out. Any other questions I can take there. Thank you guys so much for coming. I think this was a really good one. I think we got a lot of good stuff on the table to discuss and a lot for you to kind of think about over the weekend and into the next week. So if you like this, please come into the next one. Please check me out in the Trade the Pool Discord. If you want to find me other places, check out my Twitter at Justy Trades, JUSTY Trades. And there you can find my Discord and all the other stuff. But thank you so much. I will see you guys next week. Have a great week. Take care now.